Hello smart investors and welcome to For Fair Value Investing. If you are new out here, I look for stocks with good fundamentals that have the potential to appreciate by 6% or more within a year. Today's stock is Visa, which trades with the ticker name V. Visa is the largest payment processor in the world. In fiscal 2019, it processed almost $9 trillion in purchase transactions. Visa operates in over 200 countries and processes transactions in over 160 currencies. Its systems are capable of processing over 65,000 transactions per second. The stock is up by 34% from its year low on March 23, and is down 16% from its year high on September 2. In the last year, Visa barely moved, appreciating by only 2%, lagging the S&P 500 index by 6%, and over the last 5 years the stock appreciated by 133%, beating the S&P 500 by 75%. Let's check out what happened in the last 5 years. Revenue has been increasing by an average of 12%, although we have been seeing a double-digit revenue growth since 2017, but the trend seems to be slowing down. Operating margin is one of the highest figures in the stock market. Thanks to the favorable nature of the business model, Visa currently has a 67% operating margin, and the company seems to still managing to increase this figure since 2016. The number of shares outstanding is 2 billion. In the last 5 years, Visa didn't issue any significant number of shares or reduced them. Since the business is highly profitable and doesn't need funding, Visa is rewarding shareholders by paying dividends. Earnings per share has been increasing by an average of 23% faster than revenue growth, because while revenue was increasing, operating margins were increasing as well, meaning more of the revenue was available for shareholders. Dividends paid out to investors has been increasing by an average of 20% in line with earnings per share growth. We're missing the fourth quarter for 2020, but if we use analyst estimates, we can see that revenue has decreased by 4%, highly affected by the pandemic, which hurt Visa's revenue, but the outlook for the future seems better as the company is expected to pick up growth at 9% for the year 2021. Out of 35 analysts studying Visa, we have 10 strong buy, 20 buy and 5 hold ratings. The bulls are saying Visa has commanding market share in a scalable industry, and there is still plenty of runway for growth in electronic payments, which surpassed cash payments on a global basis only a couple of years ago, and the scalable nature of the business should allow Visa to improve its already impressive margins. On the other hand, bears are saying that the oligopolistic nature of the industry makes Visa and MasterCard targets for regulators, and the companies have paid some large fines. UnionPay provides an example of how governments could favor local networks, and this could shut Visa out of some emerging market opportunities. Let's check out the fundamental indicators. It scores a perfect 10 on profitability, with 23% earnings growth over the past 5 years, 67% operating margin and 38% return on equity, and an impressive 50% profit margin. The company keeps 50% of the revenue it generates. The debt score is 9 with 14 billion in cash, total assets are 78 billion, and total debt is 42 billion, giving us a debt-to-assets ratio of 54%. The dividend score is 8, since dividend has been growing by an average of 20% for the past 5 years, and the current dividend yield is 0.6%, with a very comfortable payout ratio of 22%. For the valuation, we have the score of 5, since the stock is overvalued by a whopping 16%, compared to its 5-year average of 3%. Let's check out the fair value history of Visa, and see where it stands now. 16% overvaluation is a concerning fact, and can cause the stock to drop significantly if investor sentiments were to change. For the last 1 year, Visa beat earnings estimates 3 times out of 4, and by an average of 2%. And for next year, analysts are expecting for Visa to earn $5.32 per share. Now, to get the target price, we multiply future earnings with P/E ratio, which is a method of valuation. Currently it's trading for 34 times earnings. For our high estimations, we're going to use 37, for average 34, and for low estimations we're going to use 28. Alright, on average the stock is expected to drop to 181. If we take a 10% higher expected earnings, and a higher PE ratio, we get a price of 218. If earnings disappoint, and we use a lower PE ratio, we get the price of 134. So on average the stock is expected to drop by 0.5%. As we have seen earlier, Visa is trading in an overvalued territory, and has the risk to drop by 26% if earnings disappoint, and we use a lower PE ratio. In this environment, I wouldn't recommend to buy Visa above its fair value of 157. And as always, before you invest into a stock, do your own research, and feel comfortable in what you're investing in. Always diversify across multiple industries. I'll be posting a lot of companies with high expected returns, and as long as you trust the fundamentals of the business, do not follow the herd and panic sell when you see a red day, or follow overvalued stocks, because everyone is buying. Alright, that's it for today. Thanks for watching, and please like and subscribe to my channel, and comment down below if there's a stock you're interested to invest in.